Greetings, it's Dr. Jeffrey Scott, and this is my Market MRI Pro market update for the week ending Sunday, November 17th, 2024. My email address is marketmripro@gmail.com, and welcome to this video. Market MRI Pro is a new tool that we are developing and currently in beta testing. I have started a separate site from my usual website where I do videos on a weekly basis on YouTube and a daily basis on stocksanddocs.com so that I don't confuse people. But I want to build up the content and show you how fast I can do my analysis in this dedicated program. This is for education purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. The intent is to demonstrate the tools of top-down analysis. Trading involves risk. You're solely responsible for any investment decisions you make. And you have to assume that I may own, want to buy, want to short, want to sell any of the stocks that I talk about, and I may or may not go into each one and tell you what that plan is. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And again, this is education only. I have started a group where I post the videos from the different platforms. I answer your questions more verbosely. I post symbol lists, discounts, invites to webinars, and that's called the Top Down Trader. 3 separate words. Just go to Google Group, sign in with your Google ID, email, and join my group, and you'll start getting added to my email distribution list. No cost, no obligations, and you can quit any time that I start boring you, which will be soon. All right, at least according to my wife, who, after 25 years of these videos, I think has had enough. All right, let's start with the weekly market timing model. This has 2 elements. It has a WMA and a bongo, which is a trending indicator, and there's a way that I look at those to start with a new buy signal, which is when we crossed above the WMA, and then we turned to a weekly bongo signal. The market went to a buy and has stayed in a buy since that time because it's not been reversed. To reverse it, we're going to have to close below the WMA in a sell bongo signal. Down here you see the buy-sell line. So we've been in a buy since November 6th. You can see on the weekly chart that we had reversal this week, but we have not really blown up at this point. We are still in an uptrend on the spiders, the Qs, the Russell, and on the diamonds. Of course, on the spiders, the Qs, the bongo on the weekly has gone red, so that starts to pick at my conviction on this market. If I look at the daily, my conviction will be, let's see, flip this back and forth. My conviction will be more tested because on the daily you'll see that the Qs have now gone into a sell signal. And you can see the spider, which actually during the day did trigger a sell signal, but it closed above the WMA, so it's still green. The Russell is just above the WMA. Since it's red on the bongo, if it closes below that, it'll give us a sell signal. So my short-term model is sell, my long-term model is okay, but with some concerns. I think this is a dangerous market to be overly long in. So I've been very cautious. I took profits on my short-term positions, so I have a lot less positions in the market. I tightened my stops, and I'm going to wait for the bounce. And I think we might see a bounce relatively soon. If I look at my market briefing tab, I can look at, here is a one-day performance of the major market ETFs. You can see led to the downside by the Qs, minus 2.38%, the Russell 1.49, the Diamonds 0.73, and the Spiders 1.28. The VIX was up 7.15%. We can see on the new high, new lows, they're red across the board. The leadership, one-day return, utilities, financials, and real estate. If we want to look at 5-day return, you could see to the downside, healthcare, big time technology, and materials. And we see the leaders over the last 5 days have been finances, energy, utilities have been relatively flat. certainly has been some rotation in the market. If we look at over the last 5 days, what's been leading the way is cannabis, but this is after being destroyed. If you look at a further time period, at minus 29% over the last 20 days, with much of that decline occurring with the election. Some of the green initiatives like renewable energy have been down. You can see 8.75 over the last 20 days. A lot of them took a hit with the Republican domination on Tuesday the 5th. Over here you could see bucket analysis and just showing you for the spiders, the NYSE and the NASDAQ. You can see how many sectors were up. 18%, so 2 sectors in the S&P 500, 3 sectors or 25% in the NYSE, 2 sectors in the NASDAQ. So that's a weak market. Most of the sectors were down. Industry groups up 23%, 22%, 22%. So 1 out of 5 industry groups were up. Stocks up a third, 31% in the S&P 1500, 34 in the NYSE, and 25 in the NASDAQ. So you had a market that was weak. It's hard to make money to the long side when 80% of the sectors are down and 75% of the stocks and the industry groups. I look at the buckets view to get a sense if whether or not we are close to a reversal by looking at the number of stocks that might be below the Bollinger Bands versus above. I've clearly seen the gray is yesterday, the thicker gray is a week ago, and you could see the red and the green, which is the last day, have shifted to the left, which means we've got more stocks at the bottom of their Bollinger Bands. It's much weaker. 12% on the NYSE, 11 on the S&P 1500, 16% on the Russell, and 18% on the NASDAQ are now below their Bollinger Bands. 30% gets me interesting about when you think we're going to see a reversal. But we're all heading that way, and that's something we might want to pay attention to. Not necessarily right now, but we're close. On the breadth view, you can see some worrisome findings. Not only as both the NYSE daily and the NASDAQ daily pull back, but when you look here, the stocks above the 17 in green, above the 50 in white, above the 200 in red have turned down. And if you look at new high, new lows on the indexes, the AD lines and the up-down volume have all gone negative. And these 2 upside-down triangles that are red are Hindenburg omens on both the NYSE and the NASDAQ. So we're having a breakdown in breadth. We're having Hindenburg omen signs, which are often signs of a top, that are now appearing, and that to me is a big concern. In addition, if I look at the timing model and look at the daily charts, you could see in green the 13-week new high, new low is racing down to the bottom. Now when this gets down to the level here, we're already there on the cues, we get to a level where a bounce is likely to happen. So we're probably getting close to a bounce. Whether or not I look at the percentage of stocks in the buckets below the Bollinger Bands, whether I look at that 13-week new high, new low, and we'll look at some of the major ETFs with their moving averages. I think we're getting close, but we also got NVIDIA earnings after the day on Wednesday, and just because I think they ought to bounce doesn't mean that they're going to bounce. If we go into the ratio charts, we can see what's been leading, and you could see that communications and discretionary, which have been strong, came off their tops. Bitcoin still doing great, and so is financials are leading. And the defensive plays, staples, utilities, and real estate all bounced. And what's really disappointing is healthcare is just dead. If we go into my charting layout, don't usually do this, but I'm curious. Let's look at the spider here. So here's the daily spider, and you can see the 17, the 50, and the 200-day moving averages. The 50 is at 529. We closed at 585. If we went down to the 50, that would be painful. Where would you expect us to go? That's a weekly. Let's go to the daily. My bad. I didn't think it was that far away. On the daily, you can see the 50 is at 575. You're 2% away from the 50. How surprising would it be for us to come down and test? Not surprising to me. The bongos, daily, weekly, have turned red, and we're pulling back. The high jump has come down. So I look at the spider. The first place to hold is probably the top of the gap up bar here. It's already fallen below the bottom of the gap. So this is the bar, the last close before the gap up on Tuesday. If you draw a straight line there, it probably runs into the same area as the 50. If you look here at the last high before the pullback and run, we're kind of at that level. So you have a line of defense right here, and I would think your next line of defense is kind of in the 578 range. So a bounce is close, 2% away, 3% away, but we're not there yet. Actually, 585, 575, yeah, it's just a couple percent away. If we look at the Qs, I didn't want QE, my bad. Similar pattern. This is the first line of the sand is in here. We've already broken through it. Second line is here, and the 50 is coming. So 489 to 496 is 7 points. So a couple percent away on the Qs. Seems like that 50-day is going to be a beefy and attractive target in the short term. And we'll see if the test holds and we go higher. What about the diamonds? Holding at this gap up area, this would be the next area of concern, this prior high. If it pulls through that, it's got the 17 and then the 50-day underneath. So it's 10 points away, so 2.5%, 3% move on the diamonds. And then I look at the Russell. It's broken through the bottom of the gap up. It's kind of right around the prior high and the 17, a natural place I expect to bounce. A failure here, I expect to go down to the 50, and it's closer to 3.5 points away. So to me, it seems too obvious that we're either going to drop at a bounce at the high of here, the prior high, for the next low, new high. We'll see if we have a higher low, or we're going to come down and test that 50. It's too close, too tasty. And the question is, will we get there before Wednesday when we have the NVIDIA earnings? So I think we could have a little bit more weakness. I would love to see us come in and have a big down day on Monday at the open and close higher and pull down to that 50 and bounce. I think that would be really constructive. We'll see if we get it. But I think at this point, I'm still nervous, and I wouldn't be entering a ton of positions until I get a sense of where we're going to bounce and are we going to bounce. Now, the neat thing about my tool here on the daily or on this layout is the scanner. So I'm a top-down guy. We're looking at the JAS list, and I've got some scans on it. We'll come back to. Let's turn off all the scans, or as the case may be, filters. That gives me 3367. Let's go into the top-down view. Everything's assigned into a sector. Utilities, financial services up at the top, real estate, energy. Let's look at the list of industry groups. I've ranked them by momentum, and you could pick the top industry groups. You could pick, I mentioned XLE. I think I mentioned it on the ratio charts. Actually looked pretty good. Financials look pretty good. XLE has been coming up. I don't think I mentioned it. Financial was the leader. Utility short term is moving up off the bottom. Now there's many things that I can do here. I could say, let's look at financial services. And when I click on it, it's going to tell you in my JS list there's 434 stocks that are classified as a financial service. Over on the right, it tells me That's 17% of, or there's 17 of them that are industry groups. So I can pick maybe the top three groups, 1, 2, 3, and then take a look. Are there any stocks in those 43 that look interesting? Let's rank it by short-term momentum. First one is Root. This is one I like a lot. It's a technology play for insurance. And you could see that it's now in an area that's been resistance before, but it looks like it broke out above it. This is a momentum play after earnings. I don't know if we have the earnings in here yet. You could see they made $1.35. Now, the way that people calculate it is funny. They were supposed to lose money. So compared to the loss, it's a negative. But they were supposed to lose money. So they had surprise on earnings, very big surprise on revenue. And that one looks interesting. The problem is, we'll look at the high jump. That's at 72. So this is one that's on my buy watch list. Travelers. Big run up, pull back, running again. Looks interesting. So I might start to flag these. Berkshire, kind of expensive stock to buy much of. This is the B shares, and this one looks like it's going higher as well. So I might identify a couple of these. I think CINF might have looked interesting. Big run up, sideways move. Let's put that on my watch list. And then let's add that to the watch list. And then let's turn these off and let's look at energy. XLE is starting to go up. Energy's been a big laggard. So I click on energy and it tells me that there are 205 stocks in the list. And you'll notice that a lot of these MLPs come up to the top. And I like them because they pay nice dividends. So this is TRGP. Big move up, pull back. It's kind of extended. The one that I'm playing, so let's just tag it. Look at a couple. OKE, one OK. Similar, big run up, sideways move. So those are extended and hard for me to buy. CCJ, which is uranium, had pulled back, but looks to me like it might be getting interesting again. It's up on a down day on massive volume. So let's put that into my list. And then somewhere we're going to see ET. Let's make it by symbol. And ET is the one that I like to play. It pays a 7.8% dividend. And you'll look at it when it pops up. You can see a nice uptrend pull back. Looks like it's getting ready to go. So I can throw those into my watch list. So I've looked at, from a top-down perspective, didn't look at utilities. We can look at them very quickly. Let's throw in utilities. Utilities have 90 stocks in 6 industry groups. I mentioned on the YouTube video that water looked interesting. And let's short-term momentum rank them. AWK, pull back to the 200 and bounced. That's an area, if you want to buy something that has pulled back, that might be something to put on my watch list. But what I liked was a WTRG. Let's see if that's the one. Here's another one that's pulled back. So these have pulled back, but notice in a down day of the market, all except for one were up. Just add that to my list. So I can do top down where I look at the industry group, I look at the utility, etc. I could just rank the industry groups and not worry about the sector. Aluminum was another thing that looked interesting when I looked at all my charts this weekend. So we have 3 aluminum stocks. Here's Alcoa, pullback and a breakout. Here's Century, similar pattern, breakout. I didn't look at CSTM earlier. Let's see what it looks like. Yeah, kind of dead to me. So let me just highlight those 2 and add them to my list. So I've now built a little watch list of stocks from my top-down analysis. And now let's go into the impulse. I'm going to show you how I scan from a bottoms up. So the first thing I'm going to do is I'm going to drop the filter down, and I'm going to only want volume over 500,000 shares, which with 3367 will turn to 2124, and I only want price greater than 5, which brings me down to 1795. So I'm looking for longs here because I think we're coming into a bounce area. So I might look for Cape Forest 2 days up. And that's a momentum play. Probably not going to see them with this market is my guess. Nope. All right, let's turn that off. Let's look at a multifunction CPR buy. That's one of my signals, but first I've got to turn off the Cape Forest. Turn off my bottom fishing candidates because that's not what I'm looking for. And I want to look at the multi-time frame CPR buy. This requires a stock to be in an uptrend on the weekly and then gets a new uptrend on the daily. And you can see we have 90 of those. And let's rank them by short-term momentum. And one that I like is coin. Big breakout, pullback, and a super strong day on Friday. This one's going to be correlated a lot with Bitcoin, which is doing well. Others that showed up on this list that are interesting, CMP, Compass Minerals, you're going to see something right on the, sort of a bottom fishing, but giving a strong pattern, suggesting it wants to go higher, breaking out above the 200 on massive volume. That first dot there is a CPR, and I require that to fire on the day of the scan, and I require that the weekly, the last signal, was also blue. So CPR met my criteria. And I like things that are breaking above their 200 with lots of volume breakout momentum, PSAR change, and both the relative strength and the OBV are green. So I like both of those. We can look at Desperados or Desperagar or whatever it's called. And the problem is it's so far gone. Now, look at all those dots. Look at the strength down here. Both boxes are green. I might add that to the list, but I might expect it to pull back before it goes higher. And you want to see strength, look at Palantir. And even the biggest leaders will give you multiple opportunities to buy pullbacks. And here was the last one. Do you buy it here with a high jump of 100? I don't know if you buy it here. But this is certainly a leader, so let's add that to my list as well. So what I do is I go through, I run various scans. To the long side, I can run them to the short side. If I'm running them to the short side, I'm going to look for higher price stocks. I just turned off the filters. I can rank them by so many different things. So now let's just do this. And what I can do at the end of my analysis is I can go into my list. These are the different stocks that I looked at. And I can export that list into any charting program I want. Or I could go through them, highlight it, just by hitting the down arrow, I believe. Let me make sure. Well, it's supposed to be the down arrow. One at a time, I could go through the stocks, yep, the down arrow, and I could look at them one at a time and see if there's anything that looks interesting. So what we've really created here is a top-down trader in a box. We call it Market MRI Pro, and stay tuned for a release. And for more information, contact me at marketmripro@gmail.com or join my Gmail or Google group, Top Down Trader, and when we launch, you'll get a special price. Bye.